On days like today, where you have a limit down situation, which we're now getting a little bit more accustomed to seeing, there's a few patterns that we've noticed that just keep reoccurring, especially if you're using the volatility box. The first is our usual first hour test is not really all that useful. Our volatility ranges just look like a sandwich for that first hour, and we typically have to use the next hour to determine what ranges to use. So even then, off of our conservative doomsday boxes, across the board we see that we breach outside of our volatility box ranges. That's our hint that the markets are going to be more volatile, and at least our volatility ranges aren't giving us as much of an edge as we're typically used to. Right? We see that in the Russell as well. Now let's see if these signals actually panned out to be true. So in the S&P, there were no other entries for the rest of the day. In the case of the Nasdaq, same thing. You got close, but not quite enough until the final hour, which we'll ignore. In the case of the Dow, you did hit our entry along with the target, but this happened at the edge of an hour, so not really a true signal anyways, but it was nice to see that these models were still working on the Dow. So that was our hint to start to focus on the Dow. If you were looking for a trade, you may get some volatility opportunities there. In the case of the Russell, we see we breached well outside, but that early signal in which we need to expect a little bit greater volatility than usual, even outside of our doomsday conservative, helped us stay out of this trade, right? Especially the fact that you're in the final hour. But outside of that, you had that early signal to expect more volatility by 8 a.m. Pacific. So that's takeaway one. If you are looking to trade, definitely on the conservative plus the edge signal. Another alternative is to start to focus on other markets where that volatility was being respected in that beginning hour. So if we come to the chart of something like gold, and let's zoom out. So now in the chart of gold, up in that first hour, we see that our volatility boxes look much different, right? They're actually being respected. We see that price is bouncing from areas we expect it to, and our edge signal is helping us stay on the right side of the trade. So now 6 a.m. comes around, and in this, we see once again that we're respecting our volatility box ranges. Despite an end of hour trade, you're still able to get the follow through we're looking for. So our confidence keeps building in something like gold. Now, in that 8 to 9 a.m. hour, that's when our entry actually comes on gold. Price hits the upper end of our volatility box line. On that 1 minute chart, you get that edge signal. You get multiple retests and opportunities to get in at that cyan line or better. And then we have our nice flush down to the other side for at least our T1. Now our second contracts are moved to break even once we hit that first target. And the next target is our target line. So to give you an idea of what that second trade ended up being in terms of your risk to reward, your reward was around 23 points for a risk of 0 points with your stop at break even. And initially, when you took that trade, your risk was a little bit greater than 11 points, right, with the stop outside of the volatility box. So that's where you can see on this one gold trade, being patient and striking when you do have that opportunity. We got not only price hitting our edge signals in an area where volatility is being respected, but we also had the luxury of multiple bearish edge signal arrows. And then we got the ultimate follow through for a first 11-point target and then a second 23-point target for a total of 34 points on gold, right? And that's just off of one trade. So that was a nice winner. Now, coming into the next hour, we're looking for the same sort of opportunity, right? Price to hit our volatility box, which happens here, and we're looking for our 1 minute signal to give us that green cyan arrow before price hits the other side's target. Now, the bare minimum move, which would disqualify the trade from counting, was 5.4 points, and if we try and see the follow through it made, it was still 4.7. So the trade was valid. Now the trade is valid up until we breach outside of our volatility box here, in which case we got the sign that, hey, our volatility models are no longer being respected and our edge is gone. Now, despite that, you still did get that edge signal a little bit later, which did give you the same follow through that we would have been expecting, which was a nice risk to reward. But this trade is not a valid trade using the volatility box trade plan. Now, let's say that you wanted to trade stock. Something with options is right now our IV percentile is crazy almost across the board. 100%. Our options moves in terms of what you would get from our entry point to our target is minimal, right? This usually represents right around 4 or so percent. And in the current options case scenario, we're seeing that our options are barely moving when the stock plummets or goes up because we're used to now 10, 20, 30% moves. So that's where I still am a fan of using the actual stock. And Tele was one that was on my signal, especially after the Friday presser. Now, if we load up our volatility box for Tele, price opened up in the morning. At this point, our upper volatility box clouds are still up here. So this wasn't a valid short, even though it looks great in hindsight. And we're now waiting to see if price hits either our lower end or at that point our upper end of the volatility box. The upper end, there's really not much edge at this moment for me because unless I'm willing to short the actual stock, the puts are already overvalued to the trade that I'm looking for. So it's the longs that get me most excited. And this was in our dashboard as well. So if you didn't have Thinkorswim, you could also have it loaded up in the dashboard, which would look something like this. Right, and we see using TeleDoc, our aggressive volatility box is currently inside of our long entry. And if we open this up, that long entry is at 117.18. So we're looking for price to hit right around 117.18. Then we get our edge signal, and that's our opportunity to try and get long. So now all throughout the day, headed into the morning, we only had our bearish edge signals that were overlapped with the squeeze signals from the new course from this weekend, right? So this was where if you were looking to play this bearish move, for some reason you say okay to short the stock or you're comfortable buying the puts, then our move here is looking for an entry after the close of our arrow with a minimum first target of our gray dash line. And then our next target is where we would normally be looking for our long, which is the volatility box clouds. That wasn't a trade that I was looking at, again, because of the IV, but let's assume that that is a trade you took. Well, you did hit that first target. Now for us, our entry came as price hit our volatility box right here, and then we're looking for an edge arrow signal. We get our first signal right here, and now at that point, we're looking for an entry at the cloud or better. You had plenty of opportunities to get in, could have scaled into your position, whatever you prefer at that point. But now you're looking for a move in which our stop is outside of the volatility box. So let's assume that you did get just the clouds. That on a bare minimum looks something like risking $2.36 to try and make that same $2.36 on the opposite side. You're just looking for a small move to try and capture the other side in a well-defined risk play with high probabilities, right? So now if we continue to see what happens with TeleDoc, price continues to chop inside of our clouds, and then we slowly start to make our way towards our target line. Once we hit our target line, our stop is now at break even, just as we do with all of our positions. And now we're just looking to see how high is high. Ideally, I'd like to see price hit the other side's target line. That usually doesn't happen, but whenever it does, that's a really nice risk to reward trade. If you are looking to protect your profits a bit more, you could do something like a trailing stop, in which case, once we hit the target line here, you could start to trail under, say, the target line, in which case you'd be stopped out much earlier, but you'd also be able to capture a lot more of the profits. And if you did what we did, which is just a break-even stop, then into the end of the day is where we were taken out. And ultimately, we missed out on some of these gains for the remaining portion of our shares, right, that weren't taken off at that first target. So that is the trade-off, but you can see how you had opportunities to go long the actual stock where you don't have to deal with any of the options, pricing, and volatility components that are currently going on, and instead play the bare minimum stock move, a 1-to-1 risk-to-reward ratio with some of these stocks that are making headlines. You'll see that a good play is finding some of those consistent stocks that you would say be willing to buy in a moment like this, something like Campbell Soup, Costco, things like that, and start to use these signals along with the volatility box to try and buy the dip in something that is a relatively strong stock. And again, you're looking for a small move. You're not looking for that complete bull reversal. We're getting our first target, moving our stop to break even, and then riding out the rest of the trend to see what it gives us. All right, so hopefully this video helps you understand how I trade limit downs. It's really the idea of knowing where to focus, finding the places where there's less volatility than usual, and then being able to use some asset classes like stock, which we're a little bit more familiar with less of those pricing discrepancies that are currently happening with options, and instead be able to just simply focus on the art of trading. All right, good luck trading, everyone. Check out the new squeeze course, which is linked in the description box below, and we'd love to hear your thoughts on it. All right, take care, and we'll see you in the next update.